Hey everyone, happy Thursday, June 26th. It's about 9:45 in the morning on the West Coast, and it's time for another market update. Well, it's a very data-heavy week this week in the markets. We got home sales for every type of home sales we track. We got home appreciation. We got inflation data tomorrow. But first things first, globally, thankfully, it seems like this Iran-Israel conflict is going to come to at least for the short term, a peaceful resolution, which is not only good for humanitarian reasons and for overall peace, but like we talked about last week, anything that would have threatened the price of oil in the area would have, added to inflation. And we know that the Fed is very focused on inflation. In fact, Chairman Powell gave a speech earlier this week and in different comments where, he's still talking about tariffs and their future effect on inflation. He thinks that should come to light maybe in this next, set of data we get as far as inflation goes. So he's still, hesitant to talk about rate cuts. However, there's been some other members that, broke ranks this week. I think Governor Waller, Bowman, Goolsby, they all made comments. It sounds like they're willing to look at cuts in July. So seems like, things are kind of moving in our direction. There also was some bank regulation stuff going on yesterday that I won't get in with you guys until it gets a little more serious, but that could be really good for mortgage rates. So, overall good peace, and that, some of these Fed chair people or these Fed members seem to be reasonable and be looking at things the right way, and compared to Powell, who's still looking in the rearview mirror. So getting into the data, home sales, we got all three. We got existing, which is homes that have, existing home, not a new home that, basically closed in the month of May. We got new home sales and new construction for May, and we got pending home sales. So people that went pending, didn't close yet, but went pending in the month of May. So let's take a closer look at all of those real quick. And existing homes was down or up month over month, 0.08%, down still year over year, 0.7%. Median home price was up slightly. Again, median is not average. It depends on, price of homes being built or price of homes selling. And overall, we're back up to a 4.6 month supply. That's what we consider balanced market. So we're basically at a balanced market nationally right now. Obviously, that's going to change in the area you're in. It might be a little bit different, but at least nationally, we're right about average where it's been in the seller's market for so long. And so because inventory right now we're at 1.54 million, last month 1.45, last year 1.28. So they've gained, compared to a year over year, we've gained, what is that, 250,000 houses available. Sold above list price, 28%. First time home buyers, 30%. Days on market dropped a little bit from 29 to 27. Next one, new home sales. This was a big down one. New home sales and new construction down 13.7%, now down year over year 6.3%. Median home price went up a little bit. But keep in mind, April was a big month, so it did, it looks that this month over month negative looks a little bit more than it is. When you go back to previous months, it's more in line with those. But still, it looks like something's going on. It looks like there's a slowdown in their, industry for sure. That these builders are offering quite a bit of incentives to get people to buy these houses. So even with all those incentives, they're still seeing their sales lag. So that obviously has to do with mortgage rates. That has to do with economic anxiety, lots of reasons, but not good for builders. Last one we got as far as home sales, pending home sales for the month of May. So these are homes that haven't closed yet, but went pending in May. That number is cut off a little bit. It's 4.03 million. So this went up a little bit. It was supposed to be down, I think, it's month over month at 1.8%, year over year at 1.1%. So a little bit better compared to last May. But overall, the main things that's affecting these numbers, one of the main things besides mortgage rates, and it's connected to that, this is household formation estimates. So like we've talked about, how much supply is easy to look at. We look at how many houses are available to buy, on the market and stuff. Where household, our demand as far as supply and demand goes in housing, this is household formation. So household formations is when someone's moving out to create a new household, whether they're moving out of their parents' house, moving out from a roommate, whatever, maybe divorce, that would create a new household, things like that. So as you can see, pandemic was a little weird. Time. But besides that, they've been kind of running at about 1.8 million, and then this just little box right here is 1 million. So it's you don't see a lot of change here, but it's quite a bit of change. So about 1.8 million has been our demand. However, as you can see, going back here now, we're on a pretty steady decline. We started to pop back up, but we're on a decline. We're getting closer to that 1 million number. So, that shows obviously, mortgage rates affect that, but more people are willing to stay in place right now. They're not moving out and forming new households, which obviously is, one less person leasing an apartment, one less person buying a new home, things like that. So, that, again, goes back to mortgage rates and economic anxiety, but, not good for current numbers right now, but it's also adding to that pent up demand. So, the more demand we have when rates do come down, the more the markets are going to pop, the more we're going to see these numbers jump up quite a bit. So just keep that in mind. Everything going on is still a supply and demand. That's what we're looking at. The more supply we have and less demand, the lower prices we'll get. The higher demand we have and the less supply we have, that's going to drive prices higher for people. Speaking of April home appreciation, speaking of current homeowners and prices, April home appreciation came in. Again, this is a little dated comparatively. Case Shiller, seasonally adjusted, was down -4%. So depreciation. But if you look at non-seasonally adjusted, not them doing their math, it was up about 0.6% month over month. Year over year, homes are still nationally going up about 2.7%. The 20 city index, when they just look at like 20 major markets, that's a little bit less, down 0.3, up 0.7, non-seasonally adjusted, up 3.4% year over year. So the bigger areas where jobs are and more housing are, kind of keeping these numbers a little bit better than they could be. So again, this all goes back to supply and demand. Home prices, again, non-seasonally adjusted, are still going up, just at a slower pace than they had been over the last few years. So good for people that want to see home prices kind of plateau, not good for people that want to keep seeing their home price go up. Next thing we got today came out GDP, so United States gross domestic product for Q1, so the first 3 months of 2025. The final reading, we get three readings, came out -0.5%. Previously, it came out, they were saying -0.2. So what does this say? This says the economy is slowing down. People are spending less money. Us as consumers, we drive the economy. The more we spend, the better our economy does. If we don't have as much money because of whatever reason, or we're worried about having too little money, so we want to save money, our economy is going to slow down. If our economy slows down, there's more chance that the Fed will cut rates to stimulate the economy. So again, don't want to see recessions, but any sort of weakness like this is actually a good thing for us, and the markets are acting appropriately. Next thing, so on the job front, initial jobless claims down a little bit less than expected, 236,000. Continuing claims went up again, so people are still having a harder time. There's definitely some weakness on the job fronts. We're seeing more of these warn notices where basically they have to notify people the next 2 months are going to lay off X amount of people, that kind of thing. So job market showing weakness, economy showing weakness. Last thing up, it will be inflation. So we need to make sure inflation stays where it's at or comes down a little bit further. Average 30-year conventional, where are we at? We're at 6.75. Last week, 6.87. Really, this is the lowest level in a couple months. You can look at that in two different ways. Like awesome, we're lowest level in 2 months, but also 6.75 is the lowest level in 2 months, which is a little disappointing, but head in the right direction. Let's hope we keep this momentum continue. And like I said, tomorrow we get PC inflation, Fed's favorite form of inflation. We get that tomorrow. Hopefully right now the markets are expecting pretty tame numbers. Hopefully it comes in as expected. If for whatever reason it came in lower than expected, that'll be great. Higher than expected, not so good. Next week we get the BLS jobs report right before the holiday. Then we get CPI, and then the Fed meets July 30th. And right now it's about 20% chance the market thinks they'll cut, which would be awesome. 80% chance no cut. But then afterwards, their next meeting is in September. It flips. It's about 75% chance now. The market's saying that will be a cut. 25% chance no cut. So got to keep our eye on that. Got to hope for good numbers. Hope everybody has a good week, and I'll talk to you guys next week. Thanks, guys.